Okay, let's get started into the stock market technical analysis. We're going to go ahead and look at the broad markets, look at some individual trade ideas, and wrap up. Probably won't be too long of a video. There's not a whole lot of change from today, from Friday. So we've got earnings coming up, big cap tech earnings this week, chunk of those. So keep that in mind. There's going to be volatility, especially in those large cap tech stocks and triple Qs, and really probably just tech in general. So let's go ahead and dig in. Triple Qs, I don't see much change from Friday. We're kind of just trading, just around the same levels as of Friday. Big picture, we've got this uptrend line on the daily chart. All right, we have negative divergence. We've got a divergence here, and we actually have a larger divergence that really is still intact that goes all the way back. The divergence really started to show up. I mean, if you really roll out, it's really starting to show up about right in here, all right? And so bottom line is you've got negative divergence that is in the RSI and the PPO. On the RSI, it's just the smaller one right here. So we could just go with that. We could really just look at the smaller divergence. That sets us up for a potential move down to this trend line, all right? That is the uptrend line that's been in place all year. So I continue to think that's where we're heading. We're probably not going to make moves down in that direction till after the thing, till after we get some of these reports, these earning reports. So, take note of that. But in general, that's really all that I see on tech. Let's move on. I want to look at oil. Kind of interesting today. Oil, this is the oil futures. I've already talked to the private member group about this. Guys, if you're interested in joining the private member group, getting additional trade ideas, I don't really talk about all the trade ideas that I put out in the private member group. I don't talk about them on the public channel as much. So if you're interested, join up. It's pretty affordable. In general, here's your oil futures. All right, there's a reaction of resistance. There's a breakout, back test of support, and off she goes. So that looks to me like oil is going to continue to rally. And again, we had bullish divergence that was in place, signaling the potential for a trend reversal. You got the breakout, the back test. It's bullish, all right? So it's by the dip. Oil is continuing to rally. We're seeing the oil sector, the energy companies, XLE, pop above the 200-day moving average today. So that's a breakout above that 200. It should set the algos up and the buy programs up to buy the dip, basically. And just in general, it's bullish. I'm looking across, here's ExxonMobil. ExxonMobil's not really breaking out. Chevron, yes, they're starting to sell it down. We'll see where we close the day. But looks bullish to me, at least in the short term. If oil continues to rise, it's going to put inflationary pressures on the broad market, okay? And that should re-engage the Fed. So that's what we'll look for. That's oil. And then going over to some other commodities, we can look at, obviously wheat is the star of the day, star of the show today. But again, this trade's been pretty much perfect. And I know I don't hear any compliments from people that were doubting me back when I was saying wheat looks like a bullish setup, weeks and maybe even months ago. But in general, if you stuck with it, you're profitable, and you should be profitable by a decent amount. This one, bullish falling wedge, bullish divergence, and let me see if I can get that chart. Okay, sorry, I end up drawing lines and moving stuff around. So bullish falling wedge, bullish divergence, big bullish divergence. I talked about that divergence for a long time, saying, guys, this looks like a really solid setup. We need a breakout. We got the breakout again. And the breakout here, I was also pointed out to the private member group that I wanted to see the breakout in the futures. We got the breakout in the futures. We got the breakout in the ETN here. And breakout, run up, all right? Run up to kind of first level of resistance marked there. All right, that was support there, resistance, hit resistance, pull back, back tested. It was objective to go long there. That's exactly where I re-added to my position, and off to the races again. Now we're at the 200-day. I think we're going to go through it. All right, it's the first tag. We didn't quite hit the 200-day, and so maybe a one-day pullback or consolidation. I'm really favoring kind of just a consolidation. We just could consolidate right here for maybe a week or so, and then continue upward. So that's what I got on wheat. It's by the dip. I don't see any indication that is that has changed. Now, next resistance is, you can see up here, former reaction highs. I have that at about $8, 802-ish, somewhere right in there. If we pop quickly and we run up and hit that, we'll probably have negative divergence. All right, so maybe if that happens, then at that point you're likely going to get some sort of a pullback or correction. But I'm still favoring that right now. I'm favoring a move up to that $8 for the next tag of resistance. And that would be a move from where we're at right now. And I think it could do it quickly, because when commodities run, they can run pretty quickly. Sorry, guys, my charts are lagging a little bit. There it is, about 8-9% up from where we're at. And from the buy point, or at least the back test, that's a move of about 26%. So, yeah, that one's looking good. I mean, if you're not long now, it's not very objective to be long. But one thing that's interesting, also look at gasoline, UGA. It's starting to go parabolic. It broke out above that former resistance here. That's kind of where I had it. And at that point, you can see it's just starting to go parabolic. Momentum looks pretty strong too. All right, we don't really have negative divergence. We've got strong momentum, strong price action. So I think gasoline's headed back up to this 80.38, which means at the price of the pump, you're probably going to see over $5. So, and then you'll start to hear it in the news about inflationary pressures, and the whole narrative of that we're in a brand new bull market is going to shift. So that's what I'm trading right now. I want to be ahead of that. I don't want to be waiting behind, and once it shifts, say, oh, well, what will happen is a lot of the people on my channel who says we're in a new bull market, when the narrative shifts, they'll say, well, he was bound to get something right. He's been calling for it, forever. That's what they'll say. But that's fine. We're looking to profit before that narrative shifts. Financials. And, when I look at financials, I really just look at JP Morgan most of the time. If JP Morgan set up bearish, then you can start digging into other financials. But with JP Morgan's the king of the financials. And if the king's holding up, the others will relatively hold up as well. And I don't see anything here right now that tells me it's a short. So it's continuing to rally. We'll see if this comes down in the shorter time. Okay, so that's it on JP Morgan. This one, MasterCard, it's just back testing. It continues to kind of tread. And so, it's just continuing to back test. We need some sort of a catalyst for this to start to head lower. Probably going to be on earnings, I suspect. The reason why I suspect that is the negative divergence remains. It continues to just build and extend. And ultimately, I think earnings, it's going to gap down. So that's coming up. Obviously, if you're holding that into earnings, it looks Thursday this week. It's higher risk, of course, because anything holding in earnings can gap up or gap down. But the chart tells me that it's likely going to gap down. Here's one, Rare. It was pointed out in the live stream on Saturday. Feel free to join up on those if you're interested. On this one, this is a daily chart. You can see here you've got resistance, 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 clear downtrend. There's a breakout right there. You do have bullish divergence, all right? That's been building for a while. So you have a breakout, and to me, it looks like it's coming in for a back test now. Again, you had some support right in here at about 42.97, but today, down 3%, it's breaking down. I think it's likely going to sell down at back test, and you've got earnings coming up, so could sell down, back test, earnings comes out, it's bullish, and this thing runs. It is a bullish setup, but I do see it in the short term continuing lower for that back test. And CVS, talked about this one. CVS has some resistance right there at about 76.92. There's decent resistance. We're pretty close to it now, right there. It might go up and hit it. It's got another 1.5% or so to hit that next level of resistance, and you have earnings coming up on next week. So I don't know. Maybe it runs, maybe it doesn't. I was kind of thinking it could hit the 200 before earnings or maybe shortly after. But again, you're right at that resistance, or you're close to it. So we'll see. This one was initiated as a buy. There's a back test right here, is a perfect back test, and it's up about 15% or so, 14% from that back test of that trend line. Okay, so again, there's your downtrend line, resistance. All right, there's your bullish divergence showing up down towards the lows. There's your breakout and your back test. It's objective to buy on the breakout. It's objective to buy on the back test. But now we're starting to hit resistance levels or come close. So probably going to get a pullback. I could see it popping another 1.5% and then likely going to get a pullback. And this one I pointed out, CF, downward channel, bullish divergence building. There's your breakout. I had it circled, talked about that. I called it out in the private member group specifically on the day it broke out, saying this is a buy signal. Okay, you have a breakout, back test, and rallying, into resistance right now. You can see if I roll out, you've got, this is resistance. That was former support. There's another reaction. Okay, and you're right there now. So the 200 is just overhead, but in general, you're in a zone of resistance from here up to the 200. So probably makes sense to take some profit if you haven't done so on that. This trade, if you bought it on the breakout, let's say you took it at the end of the day, you're up 15%. Okay, and that's a good trade. So I think that's, it's probably run its course, at least in the short term. Okay, CAT. This is Caterpillar. So on this one, I haven't quite marked it up, but I'll do it right now. You have negative divergence on the daily chart right there on the RSI and PPO. Okay, so you have a new high. There's your former high, and there's your new high. That's a divergent high. High probability that it will get sold into. A little bit of support. I'd probably just mark this out right here and say that's our support line. We need to see a break of that trend line to initiate a sell signal. So I think it's coming, but maybe not until after earnings. There's no reason to short this thing now, but be on the lookout for that sell signal. And we'll wrap it up with Apple, obviously the largest company in the world, or at least maybe right behind the Saudi company. Bearish rising wedge, all right, big bearish rising wedge. This is a pattern that they can extend for a while, and it definitely has, but it's a bearish pattern indicating that we're going to get at very least a correction. The widest part of the wedge is right down here. So that sets us up for basically a move down to the 200-day moving average. You also can see we have a trend line right here. So if I extend that out, that is your bear market trend line right here. So this one's not necessarily in a bear market because it obviously made new highs, but you've got resistance, resistance, resistance. We broke out, but now negative divergence has been building on this bearish rising wedge, and we have a breakdown. All right, that's a sell signal in Apple, and that could be the beginning. And as far as I can tell in the charts, it's the beginning of a move back down to this trend line right here. So Apple looks like it's projected to move down to about 162. It just depends on exactly when it hits it, but down to about 162, which is a drop in Apple of about 15 to 16%, somewhere right in there. So that's what I got. And if Apple's dropping, the tech sector is going to be dropping as well. I'm going to wrap it up, guys. Check out my stock market technical analysis course if you're interested. Link in the description below. Join up in the private member group if you're interested. Link in the description on that one. I'll catch you on the next one. Bye.